Welcome to Your Mortgage Matters, brought to you by Angel Oak Home Loans, your weekly look into what's new in the mortgage business and how it impacts you. And now your host, Matt Kreger.
Welcome back to Your Mortgage Matters podcast, hosted by Angel Oak Home Loans. I'm Matt Kreger, Senior Vice President, Divisional Manager. I have two special guests with me today, Richard Staley, a 25-year veteran of the business, and Emily Franke, 20-year veteran of the business. Both of these mortgage professionals have helped thousands and thousands of families move into their next home, and so we're very fortunate to have them here. Our subject today is really kind of highlight how Angel Oak Home Loans is different than other lenders in the market. And as we know, in major markets, Richard is in Atlanta, Georgia, and Emily Franke is in Austin, Texas, both huge real estate markets, and there's hundreds of lenders in both Atlanta and Austin. We're going to talk a little bit about how Angel Oak is different than all of these other lenders, and I think a lot of what makes Angel Oak different is loan products. And so we're going to jump into some of those loan products and how challenging situations can be solved by these two professionals. Richard, let me start with you. What loan product would you say you utilize the most, and how so?
Well, I'm in Atlanta market in the high-end district, I guess you would say Atlanta market. So dealing with self-employed individuals, and something in the range of 80+% of the clients I deal with are all self-employed. And with that brings a host of challenges and greatness, and mostly due to lack of income showing on a tax return. So the bank statement loan is clearly my number one product we use, and allows people to get in homes that they would not normally be able to based on how they're filing their returns, and dealing with a prime jumbo loan versus one of our non-QM products.
Tell me more about that. When you say someone with their bank statement, what are the challenges that a self-employed person would walk in? They walk into a traditional lender with their tax returns, get told no. How is it that your bank statement loan or something you could do for them would give them an opportunity they wouldn't get somewhere else?
Well, again, traditional financing is you provide your 2 years of taxes to any lender, and they would evaluate that income analysis. Again, I think the self-employed environment is, not trying to hide anything, but also not trying to show out as much as you can to avoid tax burdens. And so what we do is we'll look at we actually start there. I think it's important to educate the consumer on why they cannot get a full doc income loan. So I honestly do an income analysis on every tax return, and then when we realize it's not sufficient to qualify for the home loan, then we go to step 2, and that's the bank statement loan. Bank statement loan is educating them on our process, how we look at income, based on what they do for a living, expense ratio factors, percent of ownership, all different factors. And it's really an education process. And I think once you get through those 2 steps, then honestly, it's the easiest loan in the industry to do, in my opinion, in today's environment.
Good to know. So somebody walks in a complicated situation, it's actually an easy solution. Thank you, Richard. Emily, what product do you utilize the most, and tell us why?
I'm going to have to say investor cash flow. I think I use that one the very most. It's easy if they have declining income over the last 3 years or don't have tax returns that jive with what we're trying to use. All you have to do is own a primary and you can purchase an investment. We're going to use the rental analysis, and that's kind of the end of it. I call it a no-doc loan. Of course, it's not a no-doc loan, but it's a very low-doc loan and easy to qualify for.
So both of you have been doing this for 20 plus years, helped thousands and thousands of people, and you're telling me that financing is still easy. It's good to know. What are some of the challenging situations that you see walk into your office, Richard? Give us an example of some of the things that a client walks in, or a real estate professional or builder calls you and says, hey, we've been declined or we've been turned down, and you say, wait a second, were these questions asked? Do you have some scenarios you can give us?
Well, I'd say the biggest fix I get, at least in my market, is the non-warrantable condos issue. And that could be a full doc, that could be a bank statement loan, that could be, anything, because Atlanta is heavy in the condominium market, and most of these all new construction buildings are non-warrantable. And so we leverage our portfolio products in those buildings. We had one yesterday where the customer was unable to get financing at his lender, and we stepped in, put him on one of our, we call it the platinum loan, and we did the non-warrantable of the building. We closed fine. The good thing about us today doing these non-QM loans, and I think everybody needs to understand, obviously, most people know, I always tell people the rates are, 150 basis points above market. But we had the Angel Oak Advantage, the no fees refinance, and that's been huge to calm people's nerves based upon current rate environment. But I would say that's my number one fix right now. But there's everything from declining income on loans to, I could go on and on for what we do.
So if you are in the Atlanta market and you're looking for a condo, reach out to Richard Staley at Angel Oak Home Loans because he's got a solution for you. Emily, tell us some of the wins that you've had related to what we call fallout loans, or situations that seem like they get told no, but you might find something where that can work.
I think it's about not only having an outlet for creative financing, but understanding how that works. I came from somewhere else where I did a lot of these loans, but I didn't have the ability to do them in-house. And that proved problematic, but it was something that I was passionate about. And so I did them no matter what. So a gentleman that I worked with used to call them the XYZ loans because it was something he had no interest in. But I find that not only can you do them and do them well, you can do them so much better when you have a company that backs you to do things like exceptions. I have brought loans to us that other brokers turned down, and we were able to get past it with an exception. And our underwriters, I think, really take the time to look at a borrower, look at a file, and decide if there's a way to make it work. I feel that they're a lot more solution-oriented, having our own portfolio of products.
You said in-house loans. What does that mean?
Well, so previously I worked at a different company, and we didn't get the choice to call any non-QM loan a in-house loan. It was a brokered loan. So what that meant was there was another me on the other side. So anytime the borrower called me, I called the other me, they called their processor, they called their underwriter, and it was a big game of telephone. So I prefer my in-house, as I like to call it, products. It's just a different level of service.
When you talk about these in-house non-QM or non-qualified mortgages, things that are still in play but maybe a little bit off of the fairway, what percentage of your business are you doing right now that are non-QM loans, Emily?
I would say probably about a third. And for me, the last couple of years, that's been pretty typical. Prior to the last place that I was at, I never touched them because I was concerned that they were difficult loans. They're kind of labeled that way. But if you really understand the guidelines and know how to ask the correct questions, you can take somebody that didn't qualify for a loan and qualify them, like Richard was saying on the bank statement program. I had a CPA that is a CPA. At the end of the day, they wanted to claim nada. But you know what saved their loan was a bank statement loan because they do have incoming deposits. They just write it all off. So it's about knowing the right product and having the right support to push that through to closing.
Richard, when we look at the bank statement loan, I know you're a bank statement expert in the marketplace. Is it always 24 months on the bank statement, or what are some of the options there for somebody who can supply some bank statements?
Well, 24 or 12 months, those are your two options. The 24-month is a little priced just a touch better. And the reason that is because you're demonstrating experience over 2 years versus 1 year. Now, I'll tell you, the history is told, or at least my clients have been 12 months just because, some people in the pandemic made no money, and some people in the pandemic made great money. And those people that made no money and now their business is back and soaring, if you put in that last 12 months, it really brings the income down. So either or, it just depends on, the situation and what the consumer is, doing for a living or had done in the past 2 years. And those are the first two questions I asked. Tell me about your last 2 years. How'd you do? What'd you do? And again, I think it goes back to educating. I also too want to mention what Emily said. We have, again, in our market, we have loan officers that not want to do these loans. Even though they may even signed up with other non-QM lenders, they just will not go there. And that's been obviously a home run for us because, to Emily's point, we're experts in this, and it's 20% of my business probably, referrals from other lenders. So it's a big source of income.
Why you just said that other loan officers are a referral source for you, and I know on your Mortgage Matters podcast we have a lot of loan officers that listen, and realtors and builders. Why is it that other loan officers would refer them to you, Richard, versus just do them themselves?
Well, I think they're unwilling to take the risk of the relationship with the referral source. That's the number one reason. They do not, if something goes wrong, like Emily said, she was a third party dealing with it, and some third parties do fine, but I think the risk is just not worth the transaction. And what we notice is the person that may not have a lot of business takes that risk, doesn't know what they're doing, and then it blows up and it gets worse and everybody loses in that scenario. So I think it's about risk taking with the referral source.
Emily, do you agree with Richard?
I agree.
Are there any other reasons that loan officers would refer to you?
I think a lot of it is knowledge-based. I mean, I didn't even dip my toe into the non-QM market until maybe 4 or 5 years ago. I just didn't really understand it and didn't take the time to. And when you're at a company, when you're in a broker world, meaning going from your loan officer to the loan officer at wherever the lender is, it's like I said, a game of telephone, and the entire process is that way. So if you're not inept to deal with not only the realtor and the client and the title company, but now an additional lender who has opinions about how things go, it's just a lot of stress for people that don't really have the resources that we do at Angel Oak.
I read a lot of articles right now about the purchase market, investors getting into the market, the highest percentage of investors buying homes right now. And I believe that's what will draw us out of the tough economic times we're in, is investor purchases. So tell me a little bit about your relationship with the market as it relates to investors and also the investor cash flow loan.
Well, I'll go first and let Emily go because she's the investor cash flow queen here. I'm a big proponent of bank statement investor loans. That's easy. And
why is that? Tell me more why of that.
The reason is there is a rate differential between the investor cash flow and the bank statement loan. And so if you have a very rate conscious person, then you typically would, on a bank statement investor loan, you typically would get a lower market rate at that time. So that would be my only answer. I mean, Emily's 100% correct. Investor cash flows are a great loan to do, and I agree with you on the no doc thing, but we won't use that word here. But it's just Emily told me this wrong. My sense is an investor cash flow is for an experienced investor,
100%,
not a one-off tool, right?
No, I agree. Most of my people that use investor cash flow are longtime investors. They either don't want to put the paperwork together, or maybe they short-term rental. Maybe they only get great income in the summer. So a bank statement loan isn't going to work for them because they may have really large deposits some months and no deposits other months. Investor cash flow ignores that and offers an opportunity truly for any investor. I think bank statement's just a little bit more limiting in that sense, because investor cash flow is not no doc, but very, very low doc. And to be honest, a lot of my investors just love that. I've got people that would qualify traditionally. If I took their tax returns and went through all of their S Corps or their C Corps or whatever it is that they're involved in and broke it down, we could get income. But they would be pulling documents for days. Investor cash flow just really limits what they have to bring to the table. And real investors with money, time is money. They're not interested in pulling together extra mortgage statements or different things that we don't really need. So I like investor cash flow.
For the last 15 minutes here on your Mortgage Matters podcast with Angel Oak Home Loans, we've heard from two mortgage professionals that are actually in the top 1% of their profession as it relates to production. Richard Staley and Emily Franke. Richard in Atlanta, Georgia, and Emily in Austin, Texas. I have a couple more questions before we close out on this podcast. And one of those is, I hear about all these deals that you're saving, and it's special. It's special to hear about someone who maybe in a traditional sense does not think they're qualified for a home loan, but they come to you, they have a solution. So in a certain way, you're a hero for a realtor, a referral source, a builder, but also a hero for the person that's applied with you. That person probably has a family that's relying on them to provide a home, and you're helping them put them in that. Are you a hero in the market, Richard? And if so, tell us a little bit about how you see yourself saving deals in that marketplace.
Well, again, being in Atlanta for so long, I got the little, I guess the saying of that they call me Superman because I have to come in and salvage the day. That's a good and a bad thing because you're coming in and saving deals every day when maybe if you had that deal on the front end, it wouldn't be a save the day. So it's a curse and a blessing all in one. But that's what I'm known for. I mean, we just had a recent deal where buyer was sold his company, had plenty of assets, no income, beyond dividend interest income, and but wasn't enough to buy his multi-million-dollar house. And we ran one of our products called the Asset Qualifier, and qualified with flying colors, and that is another low doc loan, as Emily would say, and we got the deal done, and everybody was happy. Interest only on top of it, which made him happy. And, but yeah, I think that's kind of what we're known for in the market space. We fix stuff, and again, got to be careful there because 80% of everything we do is outside of non-QA. So we want to make sure people don't just call us for those situations, but for the conventional and jumbo and FHA and all the other stuff we do.
Well, Richard Superman Staley, and all the podcast listeners, you're not able to see, but as Richard was talking, he unbuttoned his dress shirt to show us he has a Superman tattoo on his chest. So he is here to save the day. Please reach out to him if you're in the Atlanta market. There's been so many families that have received help from Richard, and if nothing else, it proactively gives you the opportunity to understand what you are qualified for. Emily, are you a hero in the Austin market? Tell us about that.
I like to think of myself as one. I have several realtors that they're adamant that they use my services, or that realtor doesn't even want to deal with the buyer. All of my realtors know that if they bring me a deal, I will close that deal. I will fight tooth and nail to get that deal through because there's always a way. Like Richard said, we're fixers. I'm a fixer by nature. I think that any loan officer is. Whether it comes to you as a messy file and you have to get past everything the buyer and the realtors have been through because we're starting over, or if they come to you from the beginning, that's our job. Our job is to make the pieces of the puzzle work. And at the end of the day, it makes me feel really good to help someone in their dream. Everybody wants a home. Everybody wants a happy home. And I like to be able to get them to that finish line.
As we close out on your Mortgage Matters podcast, Angel Oak Home Loans, Richard Staley, if you can give us some words of encouragement. I feel like with interest rates going up and home values continuing to stay up, inflation through the roof, what are some words of encouragement for realtors and potential homeowners that you can give us?
Well, the great saying is this shall too pass in time is one thing I would encourage everybody to say. We've been doing this. I've been through a couple of these cycles, and over these years I've been in the business, and this is nothing compared to 2008. This is an absolute dream compared to 2008, and I think that's the big difference. The mortgage crisis during that time, and our hedge fund people that we listen to Monday morning say this is a temporary thing, and we'll fight through this, and hopefully next year rates will hopefully soften back up, and we'll be back to a more normalized market, and everybody get back to work and smiling a little more.
Absolutely. Emily, what are your words of encouragement for us as we've been in, I feel like, a challenging market for at least the last 4 to 6 months and maybe some more months to come?
I have to agree. Just like Richard, I've been in the business a long time. I've been in when it was amazing. I was in 2008 when nobody wanted to say the word mortgage. Mortgage is a feast or famine business, as is real estate in general. And those that have the drive to continue through will. I saw something posted, I don't know if you know Joe Mays, he does brainy quotes. He posted that the universe of mortgage lending has gotten to the point where there is a place in it for everybody. And I don't know that I felt that way until I joined Angel Oak, because I was fighting tooth and nail for some of these deals that I'm able to just put into underwriting, trust my team, close on time, and be that hero.
Well, I appreciate your time. Your Mortgage Matters podcast with Angel Oak Home Loans. We've been spending the last 20 minutes with Richard Staley from Atlanta, Georgia, a 25-year veteran, over about a decade at Angel Oak Home Loans, leading and as a top producer and in the top 1% nationally, and Emily Frankie out of Austin, Texas, who's been with Angel Oak just a little over a year. And you've heard so many encouraging things from someone who's been in the business 20 years to say that she's at a place that provides the solutions needed for her clients and for her referral sources. For all of you listening, I appreciate your time today and look forward to seeing you on the next podcast. Have a great week.
Thank you for listening to Your Mortgage Matters podcast, brought to you by Angel Oak Home Loans, where achieving your unique personal or business goals for financial success matters to us. It's all about you. Help us educate others. Please pick up your mobile device and hit the like and share button now. Angel Oak Home Loans, LLC, NMLS 685842, Equal Housing Lender.